Welcome, everyone, to this special meeting of Council, the Corporation of the Municipality of Central Elgin. Today is Monday, June the 12th. It is 6 p.m. and we're in the Council chambers. And welcome to all those who are joining us here and via Zoom. First, may I ask, does anyone have a disclosure of pecuniary interest and the general nature thereof? Seeing none. We have a delegation this evening. Mr. Rob Foster from Graham Scott Enns will be here and is here to review the 2020 financial statements. Mr. Foster.
Thank you very much. For a number of you, this may be the first time you've ever seen me or met me. I've been in this particular world since 1992, actually, was my first municipal audit to Town of Elmer. And I've been working my way through municipalities all of my career. For today, we're going to go through the financial statements for December 31st, 2022. And these are consolidated financial statements. So keeping in mind that these will include your proportionate share of the primary water board, secondary water board. It'll include the not-for-profit housing corp. So again, just keeping in mind that that influences some of the numbers that we'll see tonight. I'd like to move you to our Auditors Report. So that's page 2 of our financial statements. And so the financial statements are those of the municipality and management, but our job is to do the report, or our Auditors Report. And so what you're looking for here is a non-qualified opinion, a clean opinion, and that's what we're seeing here for these financial statements. And I just have to read the one paragraph here that in our opinion, the municipality's consolidated financial statements present fairly in all material respects the financial position of the municipality as at December 31st, 2022, and the results of its operations and its cash flows for the year then ended in accordance with Canadian accounting standards for public sector entities. So municipalities do have, and government bodies do have their own section of the handbook that deal with some of the specialties that are involved in municipalities. And upon approval of the statements tonight, there would be a report would be dated today's date of June 12th. We move forward to the consolidated statement of financial position. So this shows you your financial assets, liabilities, and non-financial assets as at December 31st, 2022 with comparatives for 2021. And I'll just kind of highlight some of the maybe the differences or things that I feel should be highlighted in this particular balance sheet. So our cash has come down about just under $3.5 million. But if we'll note a little bit further down, the investments are up. So we'll get to that in a moment. Your loan receivables, so that's the portion with Earth, the hydro entity that the municipality owns a proportionate share in. And that was on inception that you received both shares and a loan. And that loan does bear interest on an annual basis. Taxes receivable. So we did have an improvement in the collection of taxes. There were a few tax sales that went on in the year as well. But we're able to bring that balance down to the 1.5 million. Accounts receivable, so that's all other receivables other than taxes. We've got drains, HSTs, sewer, water, those type of receivables all included in an accounts receivable. So investments, so we did see that go from 3 million, which was basically the harbor funds. We did now have added municipal funds to that, and we'll see more detail in note 2. But that has been bumped up by not quite 10 million, $9.5 million of municipal funds. And then our share portion of the Earth Corporation shares at 2.2 million. There was your proportionate share, 263,000 of income in the year, and you received dividends of 65,000. So total financial assets then of 27,482,000. For our liabilities, deferred revenues, obligatory reserves. So that would be such things as development charges and the harbor funds totaling just over 5 million. Accounts payable and accrued liabilities, so we see that dropping down almost 2 million. There was less capital projects on the go, including any sort of holdbacks, that sort of thing, leaving us at the 3.4 million. Overall debt was down on the year from 31 million down to just under 30 million. We did issue 1.6 million dollars of new debt related to the fire hall, but we did have over 3 million paid back in principal in total, which is why we're still seeing that overall reduction. So your net financial debt being 10.8 million. And then our non-financial assets. So back in 2009, there was a push to start to track tangible capital assets within municipalities. So we've now set those up to the best of everyone's abilities. And each year we're now tracking the both amortization and additions to those tangible capital assets. And our note 12 will go in a little bit more detail with regard to that. But the important thing to remember is when we get down to the accumulated surplus of 151 million, we do have to keep in mind that that is not 151 million of annual surplus that would mean we wouldn't have to raise taxes for a number of years. That's actually invested in these tangible capital assets. So that surplus includes monies invested in tangible capital assets. So total non-financial assets of 162 million, and leaving that accumulated surplus. So that's the net financial debt less the non-financial assets at 1 million or 151 million. We go to our next page. So this is the statement of operations. So this is your expenditures. So we have budgeted actuals for 22, actuals for 21. Do keep in mind though that the budget numbers, so for PSAB purposes, we basically put all the funds together. There's not such a thing as a capital fund and operating fund, which is the way you still budget. So you would budget for a zero balance at the end, but would these also include amortization expense? So note 16 kind of discloses the adoptions that have been done to convert your regular budget to a PSAB based budget. And as you can see at the bottom, there was actually, as part of that process, you would have budgeted $2.2 million surplus, because we're talking about federal grants that go into capital. Those type of things would flow through this particular budget. And then if we look at 22 actuals, you know, our property tax is very comparable to actual. Our SOPs were up a little bit higher than what we had budgeted for. User charges. So the one thing we have here is, again, keeping in mind this includes your proportionate share of the primary water board. So their overall usage is we're down slightly compared to what the expected budget was for water and sewer, kind of across all feeds of that water. Our federal funding is the gas tax. So we don't always budget for that, because if we are going to use it, we'll go into reserve. So this is the portion that was used in the year. Your provincial, again, provincial grants include capital for actual purposes. So that was a capital grant driving us from the budget at 8.49 up to the 2.8 million. And then other municipalities, again, that would include grants from the county for road works, those type of things. Contributions from benefiting landowners and developers. So the way if the developer puts together a subdivision, all of the initial work that's done is then assumed by the municipality, and so we try to do our best to fair value those assets upon that transition from the developers over to the municipality, and this is for the 2022 year, the amount coming from benefiting landowners and developers. Other fees, permits, and licenses. So we did have capital donations included in there, as well as monies from the not-for-profit housing and rental fees, pushing us well above the expected budgeted numbers. When we get to the expenditure side, general government, so consulting fees, office maintenance, that sort of thing, taking us over budget in general government. Protection to persons and property, police especially being under budget, as well as repairs and maintenance on the fire side of things. Transportation being pretty bang on for budget. Environmental services, we had both those, as you remember, on the user charges. We were down on revenues or usage. We're similar seeing here on the expense side of the purchase of that water. Recreation and cultural services, hydro maintenance, a few other expenditures being lower than expected. So that resulting in an annual surplus of 8.4 million. Again, that's a PSEB surplus. Large components of that being related to capital. We go to our next page. So this is the reconciliation of those statement of changes in net debt. So we had that 8.4 million. We did have acquisition from a cash standpoint of $6.2 million of additions, $6.8 million worth of amortization. We did have the proceeds, the gain on the sale of tangible capital assets. And that's giving us our reconciliation coming down from a 19 million down to the 10 million. Our next page is the statement of cash flows. So this takes us from an accrual back to a cash basis. We generated, when we look at working capital balances, about 10 lines down there, the 12,768,000. So that was the total cash generated by the entity. We invested 9.3 of that in investments. We did receive $6,500 or $65,000 from our dividend from the common shares in Earth. We did have tangible capital asset acquisitions of just over 6 million, 6,256,000. And we did have the proceeds on sale. So a net usage of cash and capital at almost 5.6 million. So as I mentioned, for the new fire hall, we did have the issuing of 1.6 million in new debt, but we had principal repayments on the year of 3.1. So overall, that resulted in a net decrease of about $3.5 million in our regular cash balance. So the good news is we get to go a little bit faster now through the financial statements. Are no new changes to any of the accounting policies. So we can flip through. So our note 2, which in our statements is page 13. So this is where we're picking up those new investments from a municipal standpoint, in addition to the harbor fund investments, the one funds and the GICs. Go to our next page, note 5, again, breaking down those collections of receivables and the progress we made in the year, and the more detailed accounts receivable. We can flip forward to actually all the way forward to our note 11, page 17, long-term debt. So one of the benefits of taking on some of that debt in the previous 5 years is the interest rates have been locked in for some good prices, and just the one addition on the year for that new long-term debt. I think the next page is always I find important to look at when I look at my long-term debt. Where are those funds coming from to pay for that debt? So in total, we have just over 3 million coming from development charges, 1.1 from tax revenue, and then our user charges basically being sewer and water being the remaining 25.6 million. So those are the responsibilities of each group, I guess, in paying for that long-term debt. Our next page is our tangible capital assets. So these are detailed. So we have our opening balances at original cost, any additions and disposals in the year, and our ending balances. And then just below that, we have our depreciation. So our best guess at how much those assets have eroded or have been used in value. A total of 6.8 million on the year is our best estimate, and our total ending balances for each of those groups of assets. And then below that being our, what I call our net book value, which is basically the original cost less any depreciation to date. The next page is the exact same continuity for the year before for 2021, so I will not go over that. Note 13 is another important, in my mind, an important note for us to look at as far as, okay, we have this $151 million surplus. What actually makes up that surplus? And key being our general revenue fund, which includes also the proportionate share of the housing, not-for-profit housing, and primary water board, 441,000. Sewer operations, water, $1.5 million and 500,000 roughly. And then our big one being that amount, as I'd mentioned, invested in tangible capital assets, 161 million. We also have our investment in our hydro entity, in our capital fund, so that capital funds basically monies that have been set aside for capital assets that have yet to been expended at the end of the year. And then our reserves and reserve funds totaling another 11,153. And then from that, we subtract off our long-term debt, and that gives us that surplus of 151 million. And we also have our breakdown of our reserves and reserve funds below that. I think if we move forward to our note 17, page 24 of our financial statements. So in that supplementary information, we then, the municipality is required to also file what they call an information return, a financial information return to the ministry. They like to break some of those expenditures down more on a component basis. So salaries, long-term debt, materials, contracted services, amortization. And I think the key takeaway is if we take out amortization, which is a non-cash expense, that leaves us with a budget of 21 million. And if we start to look at percentages, then salaries is 43% of that, and long-term debt interest being 5%. That leaves your materials and contracted services as the points or the portions that means the council and staff can affect more often than not are those balances when it comes to the overall budgeting process. I think those were the main components of the financial statements that I wanted to review. I'd obviously be more than happy to take any questions from council at this point.
Thank you, Mr. Foster. Before opening up to questions, I have a question. How do we, you've got the valuation of earth power there in the surplus, but overall, what's the value of the contribution Central Elgin has, or how are you valuing the asset of our share of earth power?
So for similar to all financial statement assets, we would look at what your original cost was for those less any dividends that have been received plus any income that's been earned. So that is we'll call it a book value or original value of that company. It wouldn't necessarily reflect its current fair market value. If I consider some of the other entities that we've seen trade in any sort of trade in ownership over the years, the value of it is actually significantly higher than what it's showing on the financial statements. But all financial statements, because that is an arbitrary number until it's actually sold, you don't know the true value of it. We would always revert back to original cost, because that number we can audit and confirm where those numbers come from.
Thank you. Questions or comments from council? Deputy Mayor Noble.
Through you, Mr. Mayor. Mr. Foster, can you speak to the part in your report that talks about significant risk?
Okay. So when we consider from an audit standpoint, where would in any entity that we audit, the areas you want to focus on would be those of significant risk, right? So We try to establish through that process where are our estimates, where are things that we're not able to get hard numbers on or hard information on. You know, so we look at amortization as an example, is a best guess of how things have gone. So that might be something that we would say there is risk involved, not necessarily significant risk, but risk involved. Overall in the municipality, when it comes to significant risk from the definition of our handbook and our institute, this municipality doesn't have any significant risks. It has risks, but not ones that we would have to feel we go above and beyond to try to mitigate. And that's not just this municipality, that's most municipalities don't have. Try to take a different example. If your wage is based on some performance. So if you look at the for-profit industry, you look at banks or whatever, how are some of the management rewarded? Well, they're rewarded on performance. So you have a significant risk in how they're maybe recording revenue or that sort of thing. We don't have significant risks, but we do have risks in any estimate that would be involved in preparing these financial statements. Did I get where you were looking for?
I guess I was just asking, is there any concerns or we're good?
Right. So if we look at our, there's another document that was attached to these financial statements, which is our audit findings letter. And that's where we're a little bit more focused on two components of the financial statements. One is the internal controls. So that's where, you know, we're really relying on those internal controls to mitigate any risks that might be out there. So we do a number of tests statistically to reduce our concern of risk down. So we will go through both the revenue and the expenditure cycles, capital asset cycles, and look at what is in place as far as controls, retest it, make sure that those controls are functioning properly. And then as long as we do enough tests, we can statistically say that sample across the whole board, if we found there was no errors, we could extrapolate that across the full entity. So we've done those tests and we didn't have any faults, I guess you would say, or anything where we found that the controls that were supposed to be in place did not function as they were supposed to for our selected sample. So that's the internal risk component. And then we also would discuss in that whether we had any challenges from management on accounting policies. So if we felt, you know, you really should record revenue this way and they disagreed with us, we would also outline that in that audit findings letter. So in short, the audit findings letter would say that there were no concerns with the controls. We didn't have any disagreements with management. If we had found an error or something that we felt needed to be adjusted, it was adjusted. There was no what they call unrecorded entries where we found something that wasn't recorded by management. So that gives that audit finding letters basically a clean bill in that regard.
Awesome. Thank you.
Any other questions or comments, council? Seeing none, thank you, Mr. Foster, for your engagement and attention to detail on our behalf. Thank you to the team at Graham Scott Enns, and we appreciate your time.
Thank you as well, and thank you for management. You are one of the few municipalities that are making all the deadlines as far as filing FIRs and getting financial statements out in a timely basis. So that hasn't always been the case at Central Elgin.
Well, we thank you for your compliment. Moving forward, we're now switching in here to, I think, the bylaws, which will confirm this. Bylaw 2801, the confirmation bylaw. If I could get a mover and a seconder, please. Councillor Halpin and Deputy Mayor Noble.
Mayor Sloan, the motion reads, moved by Councillor Halpin, seconded by Deputy Mayor Noble, that bylaw 2801 be read a first and second time.
All those in favor? Opposed? Carried. Bylaw 2801 First and second time, mover and seconder. Deputy Mayor Noble, Councillor Connors.
Mayor Stahl, the motion reads, moved by Deputy Mayor Noble, seconded by Councillor Connors, that bylaw 2801 be read a third time and finally passed.
All those in favor? Opposed? Carried. And if I could get a mover and a seconder for adjournment, Councillor Bachman. Councillor Halpin.
Mayor Stahl, the motion reads, moved by Councillor Bachman, seconded by Councillor Halpin, that the special meeting of council dated Monday, June 12th, 2023 be adjourned at 6:26 p.m.
All those in